So welcome back everybody to another trading week. There's a few opportunities in the market setting up nicely, so I'm quite confident of having a positive week and ultimately profitable. Let's go straight into it. And what I like to do before any trading week is I like to check out the economic calendar. So I use forexfactory.com and I only really like to focus on the red folded events. So these are the high impact news. And you can see this week, Aussie US dollar is in focus straight away. Tuesday morning, we're expecting the retail sales, followed by an RBA rate statement. So this is likely to move the market, so we have to be cautious with any potential Aussie positions. And then later on in the week, we have interest rates again, this time coming from the GBP, Great British Pound. So it'll be interesting to see at the moment how they talk about the pound potential future, especially with Brexit around the corner. We can see that there's 0% chance of an interest rate hike this time, but I'm sure the report will have some wording as to how many rates they can foresee in the future. So let's start off on a pound pair. So pound JPY. On the weekly time frame, we can see that we are forming these swings, indicative of a bearish structure. We then had this flash crash at just at the beginning of 2018, which spiked down, almost 550 odd pips, 600 pips. Since then, the price has recovered, and we are now trading back above the moving averages. Now, last week's candle was quite important going forward. We can see how the price tried to break back below the moving averages, but ultimately failed and is now showing a rejection of a key level, and we did manage to close back above the moving averages. So straight away for me, that is telling me that we may have some further upside before potentially rolling over. Because for all intents and purposes, all we are doing now with this pair is because we've highlighted the structure as being bearish. We're simply waiting for a new lower high to form up around this level here before we can expect the market then to turn over and create a new low. So there's definitely a bit more space to the upside, and we're going to take that going forward as we drop down into lower time frames. The daily itself, we can see that the moving averages are crossed after we broke back above, pulled back, and we have since gone higher. On the higher time frames, the moving averages like to act as some sort of magnet to the pair. So especially on the weekly and daily, you do expect to see breakouts before pulling back. Breakouts, pulling back. And the market has now pulled back to an area which is quite attractive for any buyers that come back into the market. Not only do we have the moving averages, but we also have this key level of 14250, which was broken a couple of weeks ago, only to now be retested. We also had a nice reversal candlestick here, a bullish engulfing off a key level. So that's building up the case for this to give us maybe one more leg to the upside before the potential drop and the bearish leg to unfold. Now on the 4-hour chart, this is where we look to execute any positions. So we start drawing on our tools, we start drawing on our Fibonacci, we start drawing on our counter trend line, any intraday support resistance level. What we can see is that we've had a very nice rejection out of our Fib reversal zone down there, and we're about to try to break out of this counter trend line. Now, a couple of other things that we need in place is a moving average breaker on the 4-hour, which we have with this huge, very strong bullish momentum candle. We also need the moving averages to be crossed and pointed in the direction that we want to be trading in, which they are. They're crossed to the upside. So I do expect 145 to be met and then potentially taken out as we start to look higher, 146 and then maybe even 147 before we come down. So a couple of potential scenarios we can play here. Buyers here could be acceptable, but they would be a bit more high risk as we haven't got the full confirmation, but that would still give you a nice risk to reward. But what I would like to do is wait for a nice impulsive move to the upside before pulling back, retesting the counter trend line and probably the moving averages again, before we then look for the price to take out 145, which will be our first take profit level. Then we can look to target 146 which is D1 extension, and then maybe even 147. But at the moment, we'll keep it to 145. Again, the stops would have to be below the moving averages, so it's quite hard to predict what they would be, but let's just give it a 55 odd pip stop loss. We like to put our stops comfortably below the moving averages, just so we don't get stopped out on any fake moves. So that's a nice setup that is looking to show itself on pound JPY. We just need to wait for that further confirmation of a break back above the counter trend line, wait for that retest, then look to go higher. We'll carry on with pound pairs, and we can look at pound Aussie right now. Now the higher time frame is showing a bit of a mixed bag right now. So obviously we can see this potential head and shoulder formation. We've got left shoulder, the head, and the right shoulder. However, last week's candle, it did wipe out the previous week's gains, but then again we did reject off a key level and the moving averages. So we could potentially see a push up this week before the price then looks to roll over. Let's drop down into a lower time frame to try and see more accurate of what we can see is happening. And I think the longer time frame analysis on this pair is suggesting lower prices. So we are bearish overall. The higher time frame is telling us we're bearish. However, the fact that we have bounced off this 1.8 level tells you that we could potentially pull back to the 1.8250 level before we then give this counter trend line a go at being broken. If this counter trend line does break, then that is excellent confirmation that a new bearish leg is about to unfold, and we could actually see the price make a huge move to the downside, maybe over 1200 pips. So if that does happen, that's something we're going to be looking to trade for the rest of 2019. Let's continue to drop down to lower time frames. And we can see that the price is now consolidating at this key level. So for me, what I'm going to do here is again layer up our chart as we're on the 4-hour time frame. And we can see how 1.8250 does line up very nicely with a counter trend line and the fib reversal zone. So for me, the price does look quite appealing to make its way back up to 1.8300, 250, 300 before we then look to start selling this pair back to the downside. Any potential buy setups are going to be, they might come through, and if we manage to break 1.8100. That's the intraday level that we need to be focused on, and if you do see a 4-hour candle break above this level, then we can look for that retest before trying to catch 150 pips up here. Alternatively, the price, because we are heavily bearish, the price could just see rejection here and roll over to the downside. And if that does happen, again, we'll just have to map out an intraday level around the 1.79500s. I just keep it 1.79400. Keep it around there at the previous lows. So if we were to come to roll over from here, and then a break of this level will trigger us into a short and lead us down 250 pips to the downside. But right now, at this moment, we're kind of in no man's land. There's no real trade setup, especially with the pound news and the Aussie news coming through this week. Maybe this is the pair that we should just put to the back of our minds. But if we did get that impulsive move to the upside, we saw some rejection around the 1.8250, and that will interest me greatly in looking to sell this thing to the downside. So again, we'll be looking for tight stops, 60 pips, before the price then looks to roll over with multiple take profit levels. I think the best one would be one back to the key level at 1.800. So that would be a nice setup if we do manage to get it. We have to wait and be patient and see what happens. I think we'll know a lot more after the Aussie news early tomorrow morning. That's really going to settle the market or shake the market up a bit, but will then allow the market to then start trending nicely. So hopefully we can grab a position London session tomorrow potentially on any of these Aussie pairs if we do get that movement. USD JPY, quite common with all yen pairs is I am expecting a slightly higher push up before we do continue the downward trend. Again, we can see that the price has broken out of this counter trend line on the third bounce. 1, 2, 3. 3 touch proved critical. We did absolutely melt on that break back below 1.12. We actually did come down to spike 1.0600 at one point. The price though has since started to make a recovery, and what I'm seeing here is definitely a counter trend move, but we can still plot on a counter trend fib, and we can see how well we rejected off the 61.8 level, with the price now looking to take out the D1 extension and maybe even come up a little bit higher to 200 EMA around the 111.00 level, and then we can maybe look to start selling this pair. Momentum is looking quite bullish after this. On Friday, we saw this huge bullish engulfing breaking back through the moving averages, and that momentum looks to have carried forward into this week. Obviously, 110 is going to provide a tricky level for us to break, but I am expecting this to break and for us to go higher. Again, a potential trade setup will be on just a break and a retest of this key level. But to be honest, the move looks like it may. We obviously wanted to get in down here. There was a potential setup. We had this 3-pin pattern form off the fib reversal zone, and then since then the price has absolutely shot up. But if we were to get a nice clean break, we can then look to buy here potentially. But again, it would be a counter trend move, so it'd be one of these trades where as soon as you're in a decent amount of profit, sort of 20-30 pips of profit, you would move your stop loss to the break even or look to take your profit off the table early. That's one of the things I think a lot of traders do forget, is knowing whether we're trending whether we're trading with the market or whether we're looking to trade the counter trend moves. So obviously, if you're in a heavily bearish market, that market can roll over whenever. We personally like to trade out of a fib reversal zone, so we may think we're safe up to that level, but the price can reverse and reject off any level at any one time. So if you're trading against the overall trend, it is important to be really tight with your risk management, your money management, and your trade management, and not be afraid to take money off the table early, because you need to know that the price could then reverse back on you the other way. So that's what we're looking for USD JPY. Slightly higher prices before we then start to look for weakness between 111.00 and 112.00. What else can we have a look at? Aussie US dollar. Now, we obviously had this very nice move to the upside, fueled by FOMC comments, but also potentially pricing in the Aussie news later today. Early tomorrow morning. I personally do think 0.7400 is going to be taken out. We had a nicely bullish close to last week. After we did see the previous week, we tried to spike down, failed to break or maintain below the moving averages, which produced a nice wick, which gave us the indication that we can be heading higher. Now, I tell the members a lot in our mentorship group is, your bias can change off any one candle, and this is a prime example of how that did change. We had that rejection candle followed by a nice bullish continuation that broke a key level and that also broke the moving averages. So for me, I'm definitely looking for this price to look to go higher. It just depends how deep of a pullback we're going to get. But I do think 0.7400 is looking at the nice upside target. Reasons for that target being set as 0.7400 is because I think we can take this as a double bottom. Yes, this wick was huge, but I'm tending to forget this flash crash wicks and just focus on the bodies, because this is such a abnormal bit of price action. We don't really see something like that. So I think when it's a freak event like this and it's just abnormal, it's best just to leave it alone and just focus on the actual bodies. So we can see that a potential double bottom is forming here, with a neckline being at 0.7400. And obviously when we get there, we can say, okay, if we break this neckline, and then we'll have the pattern unfolding, and that pattern will be looked to complete up around 0.7500, or we simply get the rejection at the neckline and sending the price back down to 0.70500. So for me, 0.7400 is the line in the sand. I believe the price is going to want to be attracted to this level. It just depends if we can find any sort of setup that's going to allow us to go long. What I can see is that we can now draw a trend line in, counter trend line in. And it does look like the price is wanting to come down to test that counter trend line. Then we can build up some nice confidence here with a counter trend line with the fib, with the 200 EMA. So I've moved down to there. Does potentially look like it's going to be the route forward for Aussie. Alternatively, on a lower time frame, is that we can see we are forming these smaller swing points. So higher low, higher low, higher higher. We are looking for that new higher low to form. So it completely depends on how you like to trade. On how you like to trade, whether you're more aggressive or whether you're willing to wait. And we can see that this inner trend line does look to have been broken now. So unless this is market Monday morning manipulation, we can potentially look and expect to see the price to drift down lower to this area before we then look to go higher. That does match in quite nice with our pound Aussie analysis, where we're looking for the Aussie to potentially become weaker over the next 24 hours before the news. Before then we can potentially get that new leg higher to the upside on Aussie US dollar from around 0.71600 to try and target 240 pips to the upside. Initially I wasn't really expecting us to break back below 0.72250. Obviously this candle hasn't closed yet, so we could very much still see a whip back to the upside from here. But if we did get this 2-hour candle closed, then maybe we can see us just drift that bit lower before the buyers step back in and the price reverts back to the upside. So there's a few nice setups this week. I'm mainly focusing on the yen pairs. I do believe yen is due to weaken a little bit more, and we could see a further push to the upside. Euro JPY as well. It's all following very, very similar patterns. Just a slow retracement, but the longer the retracement goes in, the higher chance is that we actually pull back into a very, very nice position. We always want these deep pullbacks. So with Euro JPY, a pullback to 12700 does look very favourable before we then look to sell from there and come all the way to the downside. But again, what we mentioned about at the beginning, every trade with JPYs is looking like it is going to be counter trend compared to what the overall trend is telling us, picked off the higher time frames. These swing points here are telling us we're in a bearish structure. So we're just waiting for the pullback back into the moving averages potentially. We did reject off one late Friday, but we do look like now we're going to come up and retest the second moving averages as we did here. We broke lower, came back, retest, broke lower, came back, retested. So that's definitely a nice upside target before we then look for the yen to regain some strength across the board and take this pair lower, potentially back down to new lows.